In Lesson 2, we focus on one of the most important parts of becoming a successful tax deed investor, choosing the right market. Before you ever analyze a property, before you ever register for an auction, and before you ever place a bid, you need to understand where you should be investing and why. Market selection is not about chasing the lowest opening bid. It is about finding locations where your strategy, your capital, your risk tolerance, and the available properties all work together. For new investors, we recommend starting with the most familiar and marketable property types: single-family residences, condos, and townhomes. These are easier to understand, easier to compare, and usually easier to resell or rent than specialty property types like hotels or industrial buildings. For single-family homes, the preferred buy box is typically a 3-bedroom, 2-bath home, roughly between 1,300 and 1,900 square feet. That type of property usually has broad buyer demand. Once you understand your niche, the next step is county selection. Not every county is a good fit. Some counties have frequent auctions with a strong number of available properties. Other counties may only hold sales occasionally or have very limited inventory. You also need to consider whether the auction is online or live. Online auctions are easier to access, but that convenience can also create more competition. Live auctions may require travel and preparation, but they can sometimes create opportunity for investors willing to do the extra work. From there, we look at the strength of the community. A good market is supported by population, employment centers, schools, neighborhood stability, and manageable crime levels. Lesson 2 also emphasizes population density, instead of relying only on total population. Focus on concentrated activity rather than just size. A smaller county with concentrated population may offer better investment potential. After selecting a market, the next step is finding the tax sale list. There are 3 main ways to locate lists. First, you can use online auction platforms such as Real Auction, Bid for Assets, and Grant Street. Second, you can use public record link sites such as onlinesearches.com or NETR Online to find direct access. Third, you can use targeted Google searches by typing in the county name, state abbreviation, and terms like tax deed sale or tax lien sale. Once you find the list, your goal is to convert it into a workable format. Ideally, you want the data in Excel or CSV format for analysis. The key fields to organize include the parcel number, property address, opening bid, property characteristics, owner name, ARV, maximum bid, and notes. This is where market selection begins to turn into real analysis. You are not just looking at a list, you are building a decision-making system. You should sort and filter the list, remove properties that do not match your strategy, and narrow it down to the opportunities worth deeper research. One important warning: keep track of the original auction list order. Counties may remove properties before auction day if they are redeemed. Successful tax deed investing starts before the auction. It starts with choosing the right niche, selecting the right county, and preparing the data in a structured way. When you do this correctly, you are operating with a system that gives you the confidence to move to property research and disciplined bidding.